Hello, very good morning to all, and welcome to today's Daily Dose of Market Insights US Special Election Edition. So, very good morning to all. I'm Kelvin here again. Today will be Tuesday, the 29th of October 2024. So, as usual, before we start our Daily Dose for today, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Okay, so as usual, let's kickstart today's daily dose of a recap what has taken shape yesterday in terms of news flow, economic data release, and the intraday performance on the broad-based cross-asset classes. So I'd like to mention over here is that yesterday we do not have any key economic data releases during the US session, during the European session, and as well as in today's early Asia session. So let me cover more pertaining to the we call it the intraday movement on the various key broad-based cross-asset classes. So what we could see yesterday was a rather lackluster movement in the US stock market or the benchmark US stock indices. So that was actually came in within our expectation. So for those who follow our daily dose of market insight yesterday, I do highlight there's some negative technical elements on a very short-term basis that's being displayed on the Nasdaq 100 and the Dow Jones Industrial Average. So what we could see over here is that at the start there was actually a push up on the SPX, the SPX 500. Then thereafter it actually languished and trended downwards towards the closing, where it closed near the session low yesterday. So very similar on the Nasdaq 100 as well. Push up, then thereafter can't maintain the upside momentum around that 20,600 level that was actually been made on last Friday. So that was our pivotal resistance level that we highlighted yesterday, where we do expect a kind of some form of weakness as we head into this period of high volatile session, being sandwiched by number one, US election risk. Secondly will be the earnings announcement this week, which is primarily focusing on the mega cap stocks. Later I'll touch more about that later on when I come towards the end of today's daily dose segment, where we head towards the short-term intraday technical outlook. But most importantly, it closed weak at the end of yesterday's US session. So all that came within our expectation because of the Nasdaq 100 failure to actually have a positive momentum for follow through after last Friday test around at the 20,600 handle. So very interesting over here is that we managed to see some gains on the Dow Jones Industrial Average and the Russell 2000, which is adding in by 0.65% and 1.63%. So this gain by the Dow Jones Industrial Average is primarily focusing on Trump victory, potential victory in this upcoming 5th of November polling day, where we know that the betting odds are now skewing in favor of Trump. Later I'll touch more about that when I come to the US presidential election insights. And we know Trump policy actually favored less regulation on those financial institutions, especially on the amount of capital they need to set aside for their banking and commercial activities. So what you could see in the heat map on the S&P 500 yesterday, we see a strong outperformance on the banks itself. Okay, give me a minute now. Let me flash it. Yep. So over here, so what I could see, the banks are actually in the green, right? In the green over here. Okay, a very strong performance by the financials. All right. So if you were to break it down according to the sectorial performance yesterday, the 11th sector of the S&P 500, we see the stellar outperformance by the financial, which is gaining 1.27% over here. All right, 1.27%. So instead, that outperformed the intraday performance of the SPX yesterday, or the S&P 500 yesterday, which is only 0.27%. And the Russell 2000 also outperformed by a gain of 1.63%, also more pertaining to that that we call it Trump trade narrative pushing in the forefront due to this tax cuts that could benefit this US economy growth, at least in the short term. And given the fact that the Russell 2000 component stocks close to 70% of their revenue, or 80%, even 80% of their revenue, are dependent on the US domestic economy. So that actually explained to us these two intraday outperformance. But bear in mind over here is that as long as we head into this, there's still this election risk coming to play that I share with you all, why potentially there will be not so much of a clear trending scenario yet that could actually take shape from now until the 5th to 6th of November for the major US stock indices. As for the FX market over here yesterday, we see the FX market, the dollar kind of continues to actually remain firm in terms of looking at the dollar index over here. So dollar index continues to trade firm above its 200-day moving average. So yesterday almost unchanged, but it managed to actually hold above the 200-day moving average as we speak right now, and as they trade in throughout yesterday US session. So the primary of the dollar index remaining firm as well, also being driven by this ongoing Trump trade narrative that potentially could see a boost to the US dollar strength if Trump were to actually regain the White House, especially potentially a Republican sweep on the Senate and the House of Representatives as well, primarily driven by the fact that Trump proposed policy, which is a higher corporate tax incentive. That means lower corporate tax rates, more tariffs. All these are potentially inflationary in nature, and that could actually prevent the US Federal Reserve from enacting more aggressive interest rate cut cycle going forward into next year. And that also explains to us why the 10-year US Treasury yield, which is being used as a proxy for inflationary growth as well, managed to actually shoot up yesterday. It actually gap up, closed at 0.91%. Right, 1.9%, and right now as we talked during the Asia session, it's kind of almost a bit unchanged on yesterday's level. Yesterday it closed at 4.28%, and right now it's trading at 1.27%, roughly about 1 basis point down only, but very clearly it's trading very firmly above the 200-day moving average. So the next resistance on the 10-year US Treasury yield, this is the daily chart. That means we're talking about a few days, about 5 more days, over a week to go before hitting this major resistance at 4.4%. So why this 4.4%? Very, very important, because this is the descending trend line, a major one almost seen a year ago, which is 23rd of October 2023. So a bullish breakout above this 4.42% level potentially may revisit 5% and even 5.2% next. So that is a very, very bullish momentum for the 10-year US Treasury yield, but primarily more driven on the potential medium-term to long-term inflationary trend that may research in the US economy if Trump proposed policy were to actually get enacted fully. All right, so that is what the market is gaming in right now. So, and what we could see over here in the FX market at this point in time was yesterday we do see a very, very strong dollar performance against the Aussie dollar. So how do I do that? By looking at this 5-day rolling performance chart. Okay, let's give it a couple of seconds to load. All right, so what you could see at this juncture over here is that, okay, so let's take this as 29 October, because I want to waste time to actually change this, because otherwise my system will hang because while we are speaking in this GoToWebinar. So 5-day rolling performance as of now, we are speaking 29 of October 2024. So what I could see over here is that the dollar strength right now is pretty firm against the dollar JPY, the dollar yen, but against the most strongest is against the Aussie, which also managed to drag up against the Kiwi as well, given that the Aussie and the Kiwi move hand in hand. So the reason of this strong dollar strength against the Aussie could be also positioning data. Why? Because the Aussie dollar yesterday broke down a key short-term support level and managed to trade below the 200-day moving average. So that also potentially ignite a very short-term speculative flow over here to be bearish on the Aussie dollar against the USD. So that actually explained to us why that strong outperformance of the dollar against the Aussie yesterday. So for the dollar yen, for those who follow our daily dose since last week, we do mention that the dollar yen is more trading more on a political driven factor. Number one, due to the fact that the current LDP coalition-led government lose its majority sitting in the lower house election, snap election that was held on Sunday. That means currently LDP economic policy strategy for the medium term to long term may change. Why? Because in order to get more coalition, more smaller coalition to form for them to govern the lower parliament, they need to actually sit to other smaller opposition party economic proposal, and some of them are actually looking for a much more aggressive stimulus measure to actually be enacted to jumpstart to have more wages growth in Japan, and as well as a higher stimulus policy, and potentially that also could influence Japanese BOJ, Bank of Japan, current preference mode of gradual interest rate hike in the Japanese economy to normalize their decade plus of ultra low interest rate environment that was way back ago. So with this newly potentially we call it new economic policy that LDP got to actually sway to the other opposition party, that could actually impact the movement of the yen as well. So that's why we see the dollar yen, the yen is actually weakening against the dollar yesterday. And yes, there was a slight dip down, but managed to actually revive up during the US session yesterday. All right, later I'll touch out more on the dollar yen short-term technical outlook that is still holding above a key short-term support level. And the rest of the other currency continues to trade sideways. All right, so these are the three big movements so far on the FX market. The dollar remains firm against the Aussie, against the Kiwi, and against the Japanese yen. The rest is kind of a sideways movement. Right, as we head into the 5th of November US election, president election polling day. Now, with that, another thing we'll talk about the FX market. So the FX market, what we could see over here is that the not FX, sorry, the commodities market, pardon me. The West Texas crude oil actually tumbled downwards and break down below the lower, we call it the 69 or $68 per barrel, and as they plunged close to 6%. So if you look at yesterday's fall on oil price, was actually due to the fact that Israel actually retaliated against Iran by a very just a very small gesture instead of a very strong we call it a reaction from Israel. So there was a big plunge yesterday of down by -5% to 6%, depending on which benchmark you're looking at. So a big gap down, and it managed to actually trade lower throughout the entire session from Asia morning all to the way to US session on West Texas crude oil, due to the fact that there is lower risk now on Israel staging a much more harsher attack on Iran oil and gas facility, and even nuclear producing facility that could create a much more disastrous, we call it a feedback loop in the Middle East region. That means the chances of we call it disrupting oil supply disruption in Middle East gets lesser, also due to the fact that roughly also is also due to this the Democratic and Republican persuasion that they don't want to see upheaval in Middle East situation right now ahead of the very key US presidential election polling day, which is on the 5th of November. All right, so that actually sum up the intraday technical performance and on the various cross asset classes that I described earlier to you guys. So right now, let me share with you a bit of US presidential election insights as we head into the 5th of November. So what we could see over here is that very interestingly, right, we know that the betting markets have been flashing this for almost every day since last week in our US presidential election special daily dose insights, is that the market tends to react very closely to this poly market betting odds. All right, so every now and then we see Trump leading over Harris as a very high margin, and the margin get increased over here right now because these live prices. Poly market is a live betting site, and this betting site seems to be much more popular by even by financial markets traders. They're monitoring this narrative of this Trump trade. Why? Because the error is much lesser compared to other betting sites. All right, based on my own research, okay, that I read up. So Trump is now leading by 66%. So it moved up by 1.1 percentage point. Yesterday was 65, and Harris went down by 1 percentage point to 33.8%. And if you look at the 6 swing states as well over here, where these 6 swing states will determine who will win the White House on a higher margin. And the one that market is particularly concerned is Pennsylvania. Why? Because among these 6 swing states, it has a higher voltage of electoral votes. So let me recap again. US election is slightly different. Different states will have different weightage. The one that has a higher electoral votes weightage will have a higher impact chances of the candidate winning the White House. So among the 6 swing states over here, Pennsylvania has the highest weightage of 19 electoral votes. So the rest is like 11, 16, 6, 15, 10. So in Pennsylvania, Trump is also leading comfortably by 61% over 39% based on poly market betting markets. All right, so this live betting odds as those bettors place their bets. Okay, so but however, if you look at the balance of power over here, so balance of power, do not forget on 5th of November, the US citizens is not only voting for their president, they're also voting for their representative in their Senate and the House. Not totally all of them are open, because some of them, the House, especially the House, not all of them, the House, they have the midterm election as well. That means in 2026, there'll be more House seats that's available for voting. So this time around, it's only, yes, Senate is almost full. So the Senate, almost, I mean, all the seats are up for votes on the 5th of November, but not for the House. House, I think it's about 60% only, if I'm not wrong. So if you look at the current state of affair right now in the balance of power, we know that for US power making, political power making, is that not all the powers lies with the president. Yeah, even though if Trump wins, he got to see who actually constitute the Senate and the House in order to pass his policy fully. So Senate right now is potentially a full sweep, 84% as based on the betting markets, but for the House of Representatives is 50-50, it's toss up. So there is no clear indication that the Republican will have a clear sweep of the Congress. So yes, it may win the president, the White House, it may win the Senate, but it may not win the House. So it's more like a split government instead, all right, at this juncture. So, but what's interesting over here is this, there's this divergence between the betting markets odds over here. Yes, we know that the betting markets is very skewed right now towards Trump winning the presidency, but based on the polling market poll, it means poll is based on survey. So this Real Clear Politics over here, they will have a poll average taken by a stream of this newspaper or news press over here. All right, a couple of them, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. All right, 14 of them. So it's poll. So it's based on survey based. So survey based result, right? If you look at it currently right now, this is not live. This is based on data as of yesterday, 28th of October. So more or less it's kind of updated. So based on polling market, right, they are actually leading by neck to neck. 48.6 odds to Trump and 48.4 to Harris. All right, so very marginally, Trump only leading by 0.2 points or percentage point, they call it. So based on the polling survey by Real Clear Politics poll average as of data of yesterday, there's a huge divergence between the polling odds versus the betting odds right now, which market tends to actually pay more close attention, especially on the FX market. So we got to ask ourselves over here is, what if Trump doesn't win? Or what if suddenly the actual result is too close to call? There will be delay of countings. I mean, we got to wait for more we call it ballot polls to actually come in to finalize, or even take about 1 to 2 days before the finalized count are being totally tabulated. So that could actually cause a secondary impact on the markets. That means, i.e., we see dollar strength going up right now because market is paying more close attention to this poly market betting odds, all right, of the Trump trade narrative, whereas the polling market is just calling neck to neck rates, almost even. Then the next question we got to ask ourselves is, what if the market is wrong? They do not follow the poll instead, but follow the poly market, and the poll tell us it's neck to neck race. Then the actual result came out on 5th of November is too close to call. It may take a bit 1 to 2 days to finally tabulate all the states poll together to determine the decisive winner, whether is Trump or Harris. So that could actually potentially see a negative reaction on the current dollar strength right now. That means there could be a potential dollar strength setback on 5th of November or 6th of November itself. Okay, that means 5th is 1 day later over here. And also based on what we could see over here is that, yeah, this Bloomberg data. So based on Bloomberg data, Bloomberg actually did a poll over here to see what the market participants, means on people who use the Bloomberg terminal, have an opinion whether who will have a stronger, we call it impact on the US stock market. So what they did over here, they did, okay, let me show you the poll result. Okay, so outlook for stocks. Okay, so what they actually mentioned over here is that if Trump were to win, all right, they believe that Trump kind of policy will lead to a acceleration on the S&P 500. So based on the S&P as a benchmark, so black color is Trump, Harris. If majority of the participants actually have a view that if Trump were to win, Trump policy is more favorable than Harris in terms of the survey done by Bloomberg over here. Then I pose this question: what if suddenly the election is too close to call on the actual day itself, which is 6th of November Singapore time? It may take time to actually to tabulate the vote, because market right now is totally ignoring the polling chances, the polling odds, and choose to actually favor more on this betting odds market, where the Trump trade gains narrative, especially on the FX market. All right. So if this scenario doesn't turn out as expected by the betting markets, but follow the polling market instead, too close to call, that means it takes a couple of days to actually tabulate the final votes to decide the actual winner for the White House, that potentially could see this so-called Bloomberg survey, where most market participants if believe that if Trump were to win, his policy will accelerate the potential positive movement on the S&P 500. But however, if the actual results on 6th of November Singapore time is being played out too close to call, it will take days to actually tabulate the final results. Potentially, it could lead to a negative feedback loop on the US stock market, because it fails to actually meet the very strong, rosy optimism that is being placed on the markets right now based on this Bloomberg survey data. Okay, this is something that I want to share with you all in terms of the market insights. All right. So another markets pertaining to US presidential insights on the market. Now, another insight I want to share with you all on the US presidential insights is that we know that markets now is following the poly market. Okay, betting odds itself has an impact on the other broad-based liquid tradable asset classes. But one thing very interesting over here is that you know that Trump proposed trade tariffs, right, towards China over here, trade tariff towards China. But however, the China stock market at this juncture is not falling, right? The China stock market is not falling. Why? Because if you look at the current performance over here of the China's stocks listed on the US stock exchange, that means not the A shares, that means getting China stocks or ETF that has widely been accessible to international investors or traders instead, rather than the A shares, which is much more harder to access only through via the Hong Kong exchange. So if you look at what I plot over here is that there is three very popular China-based ETF that is listed on the US stock exchange. Will be the iShares China large cap ETF. Ticker code of is FXI. Invesco Golden Dragon China, PGJ, GJ, and this one is the China big technology stocks that is listed on the US exchange. They come up with the ETF as well. Crane Shares CSI China Internet, KWEB, KWEB. Then I plot the ratio against the rest of the world equity ETF, which is the ACWI, MSCI All Country World ETF. So if you look at their ETF over here, the last few days, this is the weekly chart. Since the start of 14th of October, it starts to tick up. It starts to tick up. That means what you could see over here is that instead of it crashing downwards, like strong dollar strength, like by right, we're talking about Trump trade narrative coming into the forefront. Why? Because the poly market, the betting market, is suggesting a stronger win on Trump versus Harris. And we know that Trump, his key proposed policy is to have higher tariffs towards China product coming into US. That means, i.e., potential starting a US-China trade war 2.0. So that could potentially be detrimental to China-related equity. But however, China-related stocks or ETF that is easily more accessible to international traders or investors by this ETF that is listing on the US stock exchange is not showing clear underperformance against the rest of the world. But however, it's showing now signs of revival against the rest of the world ETF. Right, and it's look at, you plot the momentum, the 10-week rolling momentum of all these three ETF, the ratio is now showing positive momentum instead rather than negative momentum. So what it means that the performance of China related stocks right now doesn't seem to have a high sensitivity, at least in the near term, towards the potential outcome of the US presidential election as we head into 5th of November. So this I'm trying to stress to you guys. That means it seems to us that China related stocks, that means potentially also impact the Hang Seng indices as well, because Hang Seng is also as a proxy of the China stock market. It's more paying attention to other factors rather than the ongoing potential of the Trump trade narrative that's being pushed up to the forefront as we're speaking right now. So what factors is actually impacting the China stock market play? It's more related to their domestic fiscal stimulus policy and monetary policy that is much more have an impact on the China market right now. And also don't forget, China market in the last 2 years has been rather unloved by international traders and investors. So that also could also explain this kind of lesser sensitivity to Trump trade tariffs at this juncture as well. So yesterday we do see a positive news flow upcoming from China in the later part of the evening Asia session, where PBOC has come up with another monetary policy stimulus, is to launch a new lending tool before year-end loan expiry. So it's more like a repo instead over here. So it's to inject a kind of much more liquidity into the China financial system, because there's close to some 2.9 trillion yuan of medium-term loans that is due to expire by the year end. So it's more like a repo facility to put in extra liquidity into the China financial system. So that's why I also explained to us yesterday's strong performance on some of the China listed stocks in US. All right, so if you go to the likes of Alibaba and Baidu over here, if you go down to my ticker screen, yeah, so I could see over here is that Alibaba rose 2.5% in the US session yesterday, Baidu as well 3.7%, JD, NetEase, PDD. So there's a few of key China big tech stocks that are listed on the US stock exchange actually outperform the performance of the Nasdaq 100. All right, so so that's the reason I'm sharing with you all right now is currently the China related stocks and ETF, the one that is listed on international stock exchange, not on the A shares, more easily accessible to international traders and investors, are not having a high sensitivity to the Trump trade narrative, but instead they are more highly sensitive to internal domestic up and coming domestic stimulus policy plans announcement that potentially we start to hear more, especially at the closure of China MPC meeting on the 8th of November, just right after 2 days after US presidential election. So they are more skewed towards align this potential much more stimulus plan that the China top policymaker they're going to spew up in the next 2 weeks. But right now they really got to do something concrete rather than just pure rhetoric in terms of the fiscal stimulus plan, because all hope seems to be pinning on it right now. All right, so this is the US presidential insights that I'll share with you all, tie into the intermarket dynamics as well. All right, so with that, now let us now throw our focus now towards the intraday technical outlook on the broad-based cross asset classes. All right, with that, let me expand my screen first for you guys to have a better view on the chart. All right, so like I did mention earlier, the rest of the other FX major cross pair against the dollar is rather mixed, especially the euro and the sterling. So let us start with the euro dollar first. Okay, let me put it, where is it? All right, so the euro dollar technical outlook continues to hover below the short-term pivotal resistance that we highlighted yesterday, 1.084, and the hourly RSI continues to print a series of lower high below this descending parallel resistance level as well, and right now it's just inch below the 50 level mark, indicating some form of downside momentum. It has been come into play on the euro dollar during today's Asia session as we are speaking. So still no change, still keeping a short-term intraday bearish bias on the euro dollar for today, using 1.0840 as my short-term pivotal resistance level to maintain this intraday bearish bias. First support level to watch on the intraday basis, 1.08. A breakdown below 1.08 potentially sees a retest on the 1.0750 medium-term pivotal support on the euro dollar. Okay, so unless this level break down on the downside, then we could see further potential downside. Why this level is important at 1.0750? Let me repeat again. On the daily time frame chart on the euro dollar, this 1.0750 is the major symmetrical triangle lower boundary that is in place since 3rd of October last year. Okay, so that's why it's a medium-term pivotal support level. Unless we could have a very clear daily close below 1.0750, then potentially we could actually validate further support level below 0.750. So these are the two support levels just to watch out for on the intraday basis. 1.08 breakdown below it exposes 1.0750. Unless today we see a push up with an hourly close above 1.0840, that would potentially invalidate today's intraday bearish bias to kickstart a potential minor mean reversion rebound scenario first in first step to expose the next near-term support level, next near-term resistance zone, pardon me, at 1.0870 / 1.090, which confluence with the 200-day moving average and the 20-day moving average, I think as a similar resistance zone level as well. So that's for the euro dollar. Turning our attention will be the sterling dollar. So still no change. The sterling dollar continues to trade yesterday sideways, but it trade below our pivotal resistance level at 130.10. And right now, as we are speaking, the RSI has starts to print out a lower high. All right, and starts to break down below the 50 level in today's Asia session on the intraday basis as we are speaking right now. So still no change, using 130.10 as my short-term pivotal resistance level, still maintain that intraday bearish bias on the sterling dollar, but first support level to watch on the intraday basis will be 1.2910 level, which is the low of last Thursday. Only a breakdown below 1.2910 level potentially sees the next near-term support level to come in at 1.2860. However, if price action starts to break up and have an hourly close above 130.10 short-term pivotal resistance, that would invalidate today's intraday bearish bias to potentially kickstart a short-term near a minor mean reversion rebound scenario at pardon me, at least in the first step, to expose the next near-term resistance of 130.60, which is a cross point to the downward sloping 20-day moving average. Above it potentially sees the minor swing high area of 8th of October and 9th of October acting as a next near-term resistance at 131.07. All right, so that wraps up the intraday technical outlook on the euro dollar and the sterling dollar. Turning our attention will be the Asia Pacific currency against the dollar, starting with the dollar yen. So dollar yen no change yesterday. Still remember, it hit our first resistance. Then we are looking for a minor pullback. The minor pullback takes shape, hit exactly at the Titan 152.30 short-term pivotal support level before staging a rebound during the US session. And right now, during the Asia session, as we are speaking right now, the RSI has managed to trade a higher low over here and now inching back upwards towards the 50 level mark, indicating some form of upside. Short-term intraday momentum still remains intact. So still no change for sure. 152.30 is indeed our Titan short-term pivotal support level that we got to monitor in order to maintain this intraday bullish bias on the dollar yen. First resistance level to watch again remains unchanged, 153.80. Above it potentially sees 154.7, 154.80 level. Only an hourly close below 152.30 with a breakdown below it will invalidate today's intraday bullish bias to potentially kickstart a minor mean reversion decline scenario, at least on an intraday basis, to expose the next near-term support level at 151.10 followed by 150.30 next. So that's for the dollar yen. Now, turning our attention will be the Aussie dollar. So we know that the Aussie dollar continues to plummet over here. So what we could see over here is that there is no clear, it already hit the 65.70 level. Right now, previously I want to turn neutral instead. But however, what we could see at this juncture as we are speaking, the hourly RSI has really broken below the support level over here. All right, it break down below support, so there's no clear signs of a bullish divergence. So with no clear signs of a bullish divergence over here, I would have the tighter key short-term pivotal support level, pivotal resistance level at 66.15. Okay, 66.15 ST pivot. Put this in red. Okay, 66.15 right now is about to break this support level that we highlighted. Still recall yesterday we do have a bearish bias, so the next support level to watch will be 65.70. So right now it's testing it right now with a long bearish Marubozu hourly candlestick. Hourly RSI continues to show a bearish condition. There's no clear bullish divergence over here because the price is now breaking down below this parallel ascending trendline support as well. So with that, as long as, yes, it's coming to oversold, so potentially there could be some form of minor bounces taking shape during the European session over here. So minor bounce could potentially come in the form of the first support level to watch. The first resistance level to watch will be at today's intraday session high. Currently we're speaking 65.86. As long as this minor bounce didn't surpass 66.15 level, which is so close to the 200-day moving average, we will still maintain that intraday bearish bias on the Aussie dollar. After 65.70, the next support level to watch will be 65.20/65.10, which is a bunch of Fibo extension cluster level on the downside. And in terms of a graphical support level, will be the minor congestion area of 7th of August and 8th of August. However, only an hourly close, a push up with an hourly close above 66.15, that means this minor bounce will now convert into a potential mean reversion rebound scenario, at least on a near-term basis, or at least on an intraday basis. Above 66.15 will invalidate today's intraday bearish bias to potentially kickstart a minor mean reversion rebound scenario, exposing the next near-term resistance level at 66.60. Above it potentially says 66.90 next on the Aussie dollar. So net no change given the current intraday bearish Marubozu formation right now. We will still maintain our intraday bearish bias using a slightly tightened key short-term pivotal resistance at 66.15 on the Aussie dollar for today. So that sum up the intraday technical outlook on the major FX dollar pair. So with that, let me touch on one FX cross pair for today, will be the Aussie CAD, to take advantage of this ongoing Aussie dollar weakness. Still recall that yesterday we highlighted Aussie Swiss over here. So the Aussie Swiss tumbled as expected, now almost come close to our support level that we highlighted at 56.70. So the next Aussie, this ongoing intraday Aussie weakness could also be established potentially using the cross pair, which is the Aussie CAD cross pair. So the Aussie cross pair, what we could see over here, that stage a bearish breakdown from this very short-term intraday descending triangle configuration that was previously in place since 8th of October, stage a breakdown right now. So what I could see over here is that I will actually use a tighten key short-term pivotal support for today, pivotal resistance for today, not support. Okay, put it at 91.60 instead. 91.60. Okay, so this will be my next resistance. Okay, let me adjust the level as the price has really moved by a fair bit. Okay, so given that as we are speaking right now, the price action has indeed tumbled now very quickly, all right, after the breakdown of this former minor descending triangle range support level, now acting as a key short-term pivotal resistance on the Aussie CAD at 91.60. So the RSI is at the oversold level. So potentially during the European session and the European session later, there could be a potential minor bounce. So first minor bounce resistance level to watch will be today's Asia session high at 91.40. So as long as this minor bounce didn't surpass with an hourly close above 91.60, bearish bias on the Aussie CAD. Next support level to watch on a near-term intraday basis, 91 figure/9080, which is the lower boundary of this minor descending channel that is in place since 21st of October, and as well as this congestion area here as well, minor swing low of 13th of September, former minor swing high of 12th of September. However, if we start to see an hourly close above 91.60, today's intraday bearish bias on the Aussie CAD FX cross pair will be invalidated to potentially see a mean reversion rebound scenario unfolding on the intraday basis towards 91.80, which correspond to the 50-day moving average, acting as a resistance level as well. Above it, potentially sees 92.10 next, okay, which correspond very closely to the 20-day moving average, acting as a resistance level as well. So this is one particular cross pair to take a look at, Aussie CAD in relation with the Aussie weakness that we are seeing right now. All right, so that should sum up the intraday technical outlook on the FX market. So now turning our attention will be the broad-based stock indices intraday technical outlook. All right, starting with the Hong Kong 33. So I could see over here is that still no change. The Hong Kong 33 continues to have a sideways movement right now between this 20,255 and 20,850 level. So today's Asia session again, it tested this 20,850, can't break above it, then there was some form of minor setback taking shape over here. So what we could do over here is that given that it has been in congestion for some time, some period already, so potentially it continues to trade within this sideways range over here. So what we could see at this point, yes, we still continue to see a series of higher low, okay, higher low, higher low, higher low that is being printed out yesterday. So with that, we will still maintain our intraday bullish bias. First support level to watch will be at 20,255. The all important support will be this zone of 19,790 / 19,445 medium term. Okay, so what I can do over here is that I will use this level here, okay, as my short term pivotal support level, okay, instead, given that it has been holding it since 22nd of October. Okay, 20,255. Okay, for a better risk management perspective. All right, so 20,255 short, 20,255 short-term pivotal support on the Hong Kong 33, still maintain that intraday bullish bias, but however, it got to have an hourly close above 20,850 to reinforce this bullish bias, at least to expose the next near-term resistance on the intraday basis at 21,550. However, if we start to see an hourly breakdown below 20,255, then potentially it could start to see a choppy minor corrective decline on the intraday basis to revisit the medium-term pivotal support zone at 19,790 / 19,445, which correspond to the rising 50-day moving average as well, very closely as the price action continues to move forward. Okay, so that's for the Hong Kong 33. The Nikkei 225. All right, so the Nikkei 225 or the Japan 225 continue to push up as expected. So hitting our first resistance at 38,890 yesterday, after coming back to pullback first, where we expected and bounce off. All right, so the hourly RSI continues to be positive over here, as it continues to trade a higher low that's being formed above the 50 level mark. So with that, we'll still maintain that intraday bullish bias on the Japan 225. So right now, I will have a Titan key short-term pivotal support at 28,350 level, which was yesterday's pullback reversal during the US session. Okay, 315, okay, 38,315. And this will be a next resistance level to watch, 38,090. Okay, so what I'm going to do now is having a tighter key short. Okay, so what I can do is any potential pullback, first pullback support level to watch will be at 38,670. As long as this pullback didn't surpass below this Titan key short-term pivotal support at 38,315, that was that V-shaped pullback rebound during the US session, during the European session yesterday. We will still maintain that intraday bullish bias on the Japan 225. Next resistance level to watch, at least on the near term after this potential minor pullback, will be 39,230 next. However, if price action starts to break down below 38,315, if hourly close below it, that would negate today's intraday bullish bias to see a much more deeper pullback towards 38,090, and potentially is a zone over here. Okay, 38,090 / 37,960. Okay, 37,960. All right, so it's a zone. So it will correspond to this dotted gray line here, which is the former minor descending trend line. Now from 15th October, now turns into a pullback support level at the 38,090/37,960. We also correspond to the 50-day moving average, acting as a support level as well. So that's for the Japan 225, still maintaining that intraday bullish bias. Now with that, let us focus our attention on the German 30. So on the German 30, price action yesterday once again during the European session hit the 19,560 level, the first resistance that we highlighted, before selling off during the start of the US session. So it seems to us that price action continues to remain trapped within this sideways range. So and also the hourly RSI doesn't look quite great right now, as it continues to print a series of lower high, all right, lower high over here, indicating lack of upside momentum. So with that, given this not so rosy hourly RSI configuration that is being depicted right now, we will flip to a intraday neutrality stance for today on the German 30. So neutral between 19,560 and 19,320. Only an hourly close above 19,560 will revive that intraday bullish bias to at least revisit the current all-time high area at 19,690/19,755. All right, so with that, now let us focus our attention to the US Wall Street 30, which is the Dow Jones Industrial Average. Price action continues to get rejected in our short-term pivotal resistance level, which is the 20-day moving average. 42,720 is the upper limit. So still using 42,720 as my short-term pivotal resistance level, maintaining the intraday bearish bias on the US Wall Street 30. First support level to watch will be last Friday minor swing low at 42,085. Below it potentially sees 41,885, which correspond to the rising 50-day moving average, as well as the medium-term ascending channel support that is in place since the start of August, 5th of August this year. Only an hourly push-up with a close above 42,720 will invalidate today's intraday bearish bias on the Wall Street 30 to kickstart a start of a impulsive up move sequence again on the US Wall Street 30 to at least revisit the minor swing high of 23rd of October at 40,060 in the first step. So that's the intraday technical outlook on the US Wall Street 30. Now, turning our attention will be the Nasdaq 100. So Nasdaq 100 continues to churn within this potential minor bearish descending wedge configuration depicted in purple line that is in place since the minor swing low of 2nd of October. So it got rejected right exactly at the upper limit, which is on last Friday. Can't make any breakthrough. So this will be still a key short-term pivotal resistance level to watch out for. 20,615, which is the upper limit of this bearish minor descending wedge. So as long as 20,615 short-term pivotal resistance holds, we will still maintain the intraday bearish bias on the Nasdaq 100. Near-term support level to watch 20,310, followed by 20,155, maximum 20,000 next. All right, which is correspond very closely to the descending wedge support, and as well as the medium-term ascending channel from the low of 5th of August as well. All right. However, if price action starts to turn up and have an hourly close above 20,615, then that would invalidate today's intraday bearish bias to kickstart a minor push-up scenario to revisit the current all-time high area or current all-time high level at 20,790 next. All right, so with that, let us now focus on our attention to the commodities market, starting with the gold XAU/USD. So no change for gold. Gold continues to trade very firmly above the 2015 short-term pivotal support level. So hourly RSI also remains positive, no signs of a bearish divergence yet, and also hasn't hit the overbought level. So still maintaining that 2015 level as my short-term pivotal support level. So this very clear support that was tested 1 time, 2 times, 3 times. So first potential pullback zone to watch out for today will be a zone over here between 200743 and 2730. Okay, this potential pullback. So this could be a potential pullback zone over here on the gold XAU/USD. As long as 2015 short-term pivotal support holds, we'll still maintain that intraday bullish bias on gold. First resistance still remains unchanged, 2760/2763. Above it sees 2774/2782. Only an hourly close below 2715 will invalidate today's intraday bullish bias to kickstart a minor corrective pullback scenario to revisit 2683/2668, which correspond to the rising 20-day moving average. Okay, all right. Now, lastly will be the West Texas oil. So West Texas oil, as we mentioned, it continues to shape that intraday bearish configuration due to more unwinding of late shorts position, banking on the hope that there will be much more harsher attacks on Israel towards Iran, but that did not take shape. So with that, we will flip to an intraday bearish bias using 69.50 as my short-term pivotal resistance for today on West Texas oil. Next support level to watch will be at 67.55/10, followed by 65.70, which is the minor swing low of 10th of September. Only a push up with an hourly close above 69.50 will invalidate today's intraday bearish bias to potentially revisit 70.50. Above it sees 73.15, which was previously a resistance that failed to break since 22nd of October. Right, so that sum up the intraday technical outlook on West Texas oil as well as the intraday technical outlook on the broad-based cost asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today? So for today's Asia session, we rather quiet, not much data to look at as well. Give me a minute, it's hang. All right, so during the whoops, where is it? Yep, during the European session over here, things to take note of pertaining to German. This JFK consumer confidence data for the month of November out at 3 p.m. Singapore time. Then you have 7:30 p.m. Pertaining to more of the Canada FX cross pair or major pair. BOC McClellan speech. Bank of Canada official McClellan speech at 7:30 p.m. Singapore time. And during the US session, we do have some important data to look at, but more of a second tier housing price data out at 9 p.m. And the more important one will be more the Conference Board consumer confidence at October, for the month of October at 10 p.m. Singapore time. Then thereafter will be a rather quiet session, and heading into tomorrow Asia session will be more pertaining to the Aussie related FX pair. 8:30 a.m. you see the release of the monthly CPI indicator for the month of September for Australia, and as well as the Q3 inflation rate for Australia, releasing at 8:30 a.m. tomorrow early Asia session, 30th October. And one data to look out for will be more pertaining to US earnings report. So for US earnings report, like I mentioned at the start of today's daily dose, or in fact yesterday daily dose, that this week will be a pivotal week for the mega cap technology stocks, especially on the Nasdaq 100, given that there's a higher weightage on the Nasdaq 100. So for today, or for tomorrow, at the close of the US session, you have the release of Alphabet, which is the one of the mega cap technology stock, releasing at the close of the US session. That means slightly after 4 a.m. Singapore time today. So it'll be tomorrow, Wednesday, 30th of October, slightly after 4 a.m. So market is looking at a 1.84 EPS consensus forecast. So something to take note of as well. All right. So with that, that sum up today's today's daily dose of market insights. Pardon me. I'm Kelvin here signing off. Do have a great day ahead, and we shall speak again tomorrow. Thank you.